Good afternoon, everyone, and welcome to today's webinar, Sustainable by Design, Making Homeownership Happen, hosted by the National Housing Conference and sponsored by NeighborWorks America. I'm David Dworkin, and I'm President and CEO of the National Housing Conference. Today is the 10th webinar in our series with our friends at NeighborWorks America. Their support not only makes these webinars possible, but also makes them widely available, which is great as they are incredibly valuable to our members and non-members alike. We'll be taking questions from attendees using the Q&A feature after panelist presentations, so please submit any questions you have for the panel through the Q&A box. Our conversation today, which will begin in a few minutes, is moderated by Deletta Dean, Regional Vice President for the Midwest region at NeighborWorks America. But before we jump into our panelists, I want to provide a brief overview of some of the work that NHC does to illustrate how difficult it's become for everyday families to imagine owning a home and what NHC has been doing to help make home ownership more attainable. Thanks, Whitney. So one of the most important initiatives that NHC has taken on is to help found and manage the Black Homeownership Collaborative. We started this as a working group within NHC, quickly realized that more and more groups were making Black homeownership a priority for a range of reasons that were particularly important. And we brought together these major work streams and leaders in the community under an independent Black Homeownership Collaborative that we would be the executive secretariat of. And you can see here, it's a very diverse group of leaders in this space. And together we developed a goal of 3 million net new homeowners by the end of 2030 and a 7-point plan that would guide how we would achieve this work. Let's go to the next slide. I think one of the most interesting advancements in the Black Homeownership Collaborative is the 3x30 mortgage calculator. And I would encourage everybody to take a look at that at the 3x30 site. The key here is that the calculator,
was saying one of the key things that the Black Homeownership Collaborative have done is put out this 3x30 mortgage calculator. And one thing that they realized was there's this continuing myth that you need to have a 20% down payment in order to even think about home ownership. And what this calculator does is it allows you to adjust that rate and not automatically start at 20%. Which initially can be very discouraging for families that are thinking about home ownership. So the slide bars here can move around, let you put in your specific information and let you see exactly what it would take, how much of a home you can afford and what your monthly payment looks like. It also takes care to include closing costs as well as down payments, so you don't feel like you're shocked by the sticker price of closing costs when the time comes around. So next slide, please, Whitney. So a few other things that we have been tracking at NHC, which is just what does the first-time home buyer market look like, and how has it become more expensive in recent years? And if we can go ahead and go to the next couple slides, I'm going to skip ahead. Perfect, thank you. So we use information from NHC's paycheck to paycheck database to calculate what is the income necessary for a range of professions across different MSAs to actually be able to purchase a home. And what we've seen, along with many others, is between the rising interest rates and the rising cost of homes, that the income necessary to afford the same median priced home has actually doubled since August 2019, where it initially took $66,710 in annual income. You would now have to earn $126,420,000 in August of 2023. So all of this to say, the people who could have afforded homeownership 3, 4, 5 years ago are now in a place where it just doesn't even seem attainable. Next slide, please. And just a couple of examples. You can see this information on NHC's paycheck to paycheck database. But if you were interested in breaking it down by different occupations, you can see that accountants and auditors, different teachers, registered nurses, all of these people, and this is looking at the Philadelphia MSA, just aren't even close to making the amount of money that they would need to put a 3% down payment on a home or a 10% down payment. And next slide, please. Same for Atlanta. And just a little bit more information on the year-over-year changes in income needed to buy with 3% down. And what we like to highlight on this is not something that is just happening in huge urban areas anymore. You can see Oklahoma City, Oklahoma, Cleveland, Ohio, Kansas City, Missouri. This is a housing problem that is reaching all areas, not just urban areas. And next slide. All right, and I'm going to pass it off to our moderator today, Deletta. Deletta, if you'd like to come on screen.
All right, thank you, Brittany and David. Feel better. NeighborWorks America, we are so pleased to sponsor this webinar series and to work with the National Housing Conference to create a platform to discuss such important issues like Black home ownership and home ownership in general. I'm excited to be here today with our panelists, and allow me to introduce our panelists. Mosé Gatlin, Senior Vice President of Strategic Growth and Expansion at New American Funding. Elena Gonzalez, COO at NeighborWorks affiliate network organization HomeWise. Tucker Bartlett, Executive Vice President at Self Help Credit Union. And Megan McCarthy, Vice President of Affordable Housing and Consumer Empowerment at Housing Partnership Network. We will hear from them shortly. For those who aren't familiar with NeighborWorks America, we are a national nonprofit chartered organization. We were congressionally chartered in 1978. NeighborWorks America was born from a resident-led campaign, a campaign for better housing led by Dorothy Richardson, who fought for equity and innovative solutions to her local housing and community development challenges in Pittsburgh. Today, we support a network of over 250 local nonprofit housing and community development organizations that create opportunities for people to live in safe, affordable housing, build assets and wealth, and strengthen their communities. Our network is on the ground. We support families and communities in every state, including the District of Columbia, Puerto Rico, and tribal lands. At a very high level, our network serves folks along the financial capability continuum, from people on the brink of eviction to those on the path of home ownership. Our organizations within our network tailor their approach based on local needs and opportunities. Many offer financial coaching and education in conjunction with safe, affordable financial products. At a national level, we foster peer learning. We build capacity of organizations within our network, and we provide flexible grant funding so that they can provide services in their communities or in their service areas. We bring local expertise and insight into the nation's largest training platform for community development and affordable housing practitioners. Some of you may have attended a NeighborWorks Training Institute in person, or perhaps on one of our virtual institutes. Individually and collectively, NeighborWorks America organizations are moving the needle on creating affordable homeownership opportunities and removing barriers that have historically excluded low-income, Black communities, and other communities of color from accessing the single largest wealth tool in America, and that's homeownership. Give you a few stats. In FY 2023, the NeighborWorks Network assisted over 16,000 families and individuals in purchasing a home. We counseled and educated over 111,000 customers on housing issues and helped over 12,000 households preserve home ownership. Since our founding, homeownership promotion has been at the core of NeighborWorks America's strategy. We helped our network organizations develop their organizational capacity to meet consumers where they are, whether that be through financial capability and credit building services, homebuyer education and counseling, down payment assistance, mortgage lending, and more. Through the Neighborhood Lift program, a partnership between NeighborWorks America, Wells Fargo, and the Wells Fargo Foundation, network organizations deployed over $356 million in down payment assistance, enabling over 25,000 families to become homeowners and leveraging nearly $4 billion in first mortgages. And here's my favorite part. A far greater percentage of those buyers were people of color. And those individuals were served by this program, and they may not have been served by the general market at those numbers. NeighborWorks has supported network organizations' efforts to serve their communities through several intentional initiatives, including the Accelerating Homeownership for People of Color grant program. So as it was mentioned earlier, I am the Vice President of the Midwest region. Within the Midwest region, we have 13 states, and those are your traditional upper and lower Midwestern states. So that's from the Dakotas to Michigan and also Oklahoma. So of course, we have 58 organizations within that network. So I'll share with you just some of the programs that are very germane to the conversation that we are having here today. So one of our organizations in Illinois, it is the Neighbor Project. And the Neighbor Project is very intentional about building Black wealth, in that they have a financial empowerment center where they provide financial education and also a matching program for down payment assistance. And within that, they work on individuals to help establish a credit history, improve their credit score, and then also work on budgeting. Another one of our programs, our network organizations, is CHN Housing Partnership, and they're based in Ohio. And that organization has created a loan program called the Believe Mortgage. And the Believe Mortgage program was created specifically to increase Black home ownership in Cleveland. And in addition to providing financing to Black families and individuals looking to purchase housing in Cleveland community, they also offer down payment assistance, home repair grants, and loans and through their education center. Last year, CHN Housing Partners helped over 4,000 people through this education program. And these are 4,000 Black families and individuals through this program. 192 homeowners secured their first mortgage through the Believe Mortgage program. So those are just a few of the examples from organizations that are a part of the NeighborWorks family. So next, I would like to turn it over to Mose, and she will introduce herself and then also talk about some of the programs that she's working on. Mose?
Hey there, everybody. How are you today? I'm Mose Gatling, the Senior Vice President of Strategic Growth and Expansion at New American Funding. I actually still originate loans, believe it or not. I love to be out in the community and really working with my community partners and home builders and employers to try to help really be a help or an aid to this life cycle of home ownership. I feel like one of the biggest things that we need right now, that I've tried to help in my own neck of the woods, which is Las Vegas, is bridging the gap. We have so many community partners out here, whether they be CDFIs, credit unions, approved counseling agencies, and things like that. And a lot of times they work in silos. As a lender that has access to a lot of products specifically to help different communities, especially diverse communities, it's not often that you will see us working directly with counseling agencies or down payment assistance agencies or home builders. Everybody's just kind of off in their own corner. So the one thing that I wanted to make my goal the last few years was to make sure that I had partnerships with my community partners, my state down payment assistance agency, the HUD counselors, whoever's offering down payment assistance, and make sure that I went out and talked to them and they knew me. I needed them to know exactly who I was and where I was, not just because I do loans, but because I go out and I'm able to garner a little bit of, let's say, a crowd. I can do a class and have maybe 50 people there that want to know really those next steps in ownership. And then I wanted to take my community partners and have them meet the home builders or developers that are specifically in my area that really cater to the need for this housing, more affordable housing, or what would be the most affordable housing. That's national, local, and regional home builders in my area that are building homes, let's say, in the upper 200s, all the way, up to under 500,000 in my area. I wanted my community partners to be able to touch, feel, smell what that product looked like, and find out what the home builders in the area were offering. And the reason why it became so key is because of the lack of inventory. As a loan officer, I think a little bit different. I do want to make sure I'm out in the community and helping people, but I also look at, as a loan officer, who I can help, because that is the source of pay when it comes to loan professionals. They're out there to find out who they can qualify and marry them with a place where they can get the actual home. That way, we are not just qualifying people and not really, if you don't know your area and who's out there selling homes and what the price points are, you can't be too much of an aid when qualifying someone specific to something they can actually purchase. So getting my builders and the people that I work with in home building with these community partners, that way they also are as familiar as I am about what is out there, and get away from everybody in my area working in these silos on these solo missions to help people without bridging all of the gaps for financing, down payment assistance, and most importantly, that inventory that is so precious right now, in order to make sure that we don't have people as discouraged. I have been really a shoulder for a lot of people that get discouraged either earlier in the process or at the time they're qualified, if they're qualified for something that doesn't allow them to make a purchase. So I wanted to be very, very, very mindful of when I'm qualifying someone to make sure they're talking with somebody else that knows where that product happens to be. That way we don't lose them simply to not knowing where we need to be at. Reaching the diverse communities in my area, I wanted to also make sure I met them where they were. Going out to the community, not making it a 9 to 5 situation, and just being out there, whether it be the weekends, the evenings, any fairs that might be going on, and to really talk to them about ownership without it being a high level situation. I can speak mortgage person very, very well, but the clients, they're good at what they're good at, and I'm good at what I'm good at. So I wanted to leave that out of the situation. And I always challenge my colleagues in mortgage to basically tell a homeowner or a potential homeowner debt ratio without saying the word debt ratio. Just because when you talk about renting homes, they've managed to say it for so many years and be able to engage people so they don't lose them to maybe not feeling like they're very aware of what's going on. Okay. And in doing so, in my new role, I'm being able to design products that really help the general public. And again, working with home builders and the people building the inventory, really analyzing the people that they can serve and helping them understand affordability, what it's looking like, what the current market rates are like. And those home builders have managed to build not only product or have the knowledge for developing product, but also to have any rate programs or paying closing costs if that's needed to take the burden off of the community and help more people get into the homes. So it's been very, very successful doing that. when we're all partnering together. And that has been more of the positive, especially having state agencies and down payment assistance agencies that are willing to talk to all parties to make sure it works and it can be executed. Going beyond just the thought or the notion of having the product itself, but that execution. And with home buyers as a loan professional, engaging them a little bit more on the humanality side of things, I guess I'll venture to say. Qualification, scary words to people, delving into the psychology of the potential home buyer, to talk about doing an assessment of their ability to qualify, talking them through things instead of making it feel or sound more like it is only a yes or a no situation. Getting qualified can be scary enough. So when you tell them, let's get qualified, a lot of times they sit on the sidelines. There's so many mortgage ready, diverse people out there right now, especially Black individuals. And we're saying we're searching for them. They're out there. There are some that are readily qualified, some that have money to put down, some that have phenomenal scores and don't need to be incubated or get into some type of credit leveraging. It's simply they're maybe afraid or gun shy on going out and getting into the process again when there is maybe perhaps some type of trauma attached to it, whether it's they watched a family member lose their home in 2010, or someone tells them that it's scary to get a loan, or they don't want to answer the HMDA questions in order to not be discriminated against. There's still fears out there, even with home buyers that are in their 20s, believe it or not, where their aunt or someone has told them. I've ran into two literally just in the month of April that didn't know if they wanted to answer the HMDA questions and would it actually hinder them in getting a mortgage. So the scary part is just that yes or a no. There is no in between. So changing the language that I use with the buyers has been important, and also sharing that with my partners. And when we talk to people, and to not make sure we're not projecting poverty. And sometimes projecting poverty is just older words that were used in mortgage and real estate. When fair housing came about, it's not 1968, it's 2024. So maybe not educating people, because I don't consider myself uneducated because I can't repair a car. It just means I'm not good at that. So I try to also not tell people I'm going to educate them. We use different words for basically engaging them in the path of home ownership, or do events that are a little bit different to really get more people out in the masses to be able to learn about ownership and have it be a safe environment for them to do so. So it has definitely been a joy, and I'm glad I got a chance to talk to everybody. And I think I'm going to now pass this torch to Elena Gonzalez, who is also going to speak about her path in this.
Thank you, Mose. Gosh, I resonated with so much that you said, and I'm sure most of the participants did as well. So thank you for having me. My name is Elena Gonzalez. I'm the Chief Operating Officer at HomeWise, a fairly large CDFI in New Mexico. We started in the 1980s in Santa Fe, and I'm based in the Albuquerque office, although I go back and forth. So HomeWise is really our mission is to help create successful, sustainable homeowners and strengthen neighborhoods. And so we do that in a myriad of ways, but we have created a very effective business model, very integrated, and to achieve that mission and help people towards homeownership here in New Mexico. Also having a strategic mission to help close the racial wealth gap here in New Mexico via homeownership. So we built a business model where we have a robust home buyer counseling and education program, group classes, financial fitness classes, but we take pride in the amount of time that we spend with one-on-one financial coaching, very custom coaching for each family that we serve here in New Mexico. We also, at HomeWise, we have real estate sales group. Everybody is on salary, so we have this team environment to help each family find something that they can afford. And we also develop housing, so we build communities both in Santa Fe, and we're starting to scratch the surface here in Albuquerque with some development for single family housing. So I think that kind of will shed some light on some things that I will talk about regarding affordability in a few minutes. HomeWise is also fortunate to be a lender. So we typically do Fannie Mae loans, conventional lending. We're a Fannie Mae seller servicer. And we also serve people with ITIN numbers, and we partner with Self-Help Credit Union on those to provide liquidity, and we sell those loans to self-help. And we also raise capital to do some portfolio lending. We try to make our mortgages affordable, and I think from our perspective, we're always trying to change, shift people's paradigm when they hear the words affordable housing. No, that doesn't mean like cheaply built homes, sticks and bricks. It means, how do we make that home affordable for this family, for this borrower? And we're lucky enough to be a lender and raise money and do a myriad of things to make that happen. Part of our business model that I love is we service all of our loans. And so I think that makes a true difference in creating this kind of client for life. And it really is the reason we have one of the lowest delinquency rates I have ever known. I've been here for 10 years, but I've been in the realm of nonprofit affordable housing for over 30 years here in New Mexico. And our delinquency rate is around 1.2%, 30 plus days. I think it's because of the coaching and education and servicing our own loans that makes that possible. And so we also do a few other things because we're a lender. We think home repair programs are also vital in the communities to create that sustainability. And those programs are not only for the people we help get into home ownership, but they're for families typically below 80% of the area median income. We have a really great, robust program here in Albuquerque, and with a lens towards energy efficiency too. How can we make that home more affordable for the long term for those homeowners? So that is really important as well. Going back to kind of priding ourselves at HomeWise of being a CDFI, having that flexibility and taking the time to come up with innovative products. And as David mentioned in the beginning, we're talking about a very challenging time with housing affordability. Everybody on this call in New Mexico as well, you might be surprised that in Albuquerque, our median price is $351,000. In Santa Fe, it's closer to $700,000. So we're facing the same crisis here in our state as well. So we step back and we try really hard to combine resources for down payment assistance. And we might have a borrower getting 1, 2, or 3 different sources of subsidy, and we stack those behind the first mortgage. I think that's important for everybody on this call to really dig into. You've got to stay curious what's out there that you can help your borrowers tap into. And so we get capital from federal, state, and local. A couple of examples for you all to share it on our down payment assistance. We tap into the Federal Home Loan Bank of Dallas. Their HELP program this year went up to $20,000 per borrower, under 80% of area median income. A lot of folks don't know that. So we use that, we stack it in there. We get capital magnet funding. Occasionally we apply for that. Actually, the National Fair Housing Alliance came out with, for the city of Albuquerque, a $10,000 grant for Black and Hispanic families. And we ran through about 185,000 of that just recently. And of course, as Deletta mentioned in the beginning, NeighborWorks America has been a superb partner with resources for borrowers. My goodness, the Project Reinvest, the Neighborhood Lift through Wells Fargo. We had 2 rounds of that, and it was incredible. It did reach a lot of families. So I wanted to also talk about the importance of not only down payment assistance, but how are we working with those borrowers to increase their purchasing power? Because we know rates are higher, and if they qualify for subsidies, great. But we're also looking at innovative programs as well. How can we help people get through the barriers of credit, debt, and savings? And one of the ways we just partnered with JP Morgan Chase and the Urban Institute. We were one of the recipients of their philanthropic investment recently on the Housing Innovation Program. I sat back, and what keeps me up at night, I said, how can we create a credit building loan program, but in such a way where it's a matched savings program? And so we built that. We're just getting it off the ground. We've had 20 closings. So it is a $1,000 loan, which we hold back in escrow because it's really a matched savings program. They make payments for 12 months, and we match it 4-to-1. So then they walk away with $5,000 to purchase a home, use it as a down payment, and then we can stack other assistance if need be. And for those families who need it for credit or debt pay down at the end of their success, we'll still match it 1-to-1. So they have $2,000 for their emergency reserves or to pay down debt. So we're also working with employers. How can we get employers to do match savings, which we have, or down payment assistance? For example, there's a school in Santa Fe. They raised money and said, we're going to put $50,000 of down payment assistance for our teachers who want to buy a home in Santa Fe so they can live where they work, which is a huge thing. So I encourage people to do that, work with partners in their community, employers. It's a great employee retention program. So lots of innovative things I think that we're doing to combat the affordability. And just a couple more things I do want to mention. The real estate development that we do, we have, it's a great business model, and some of you who develop real estate or home ownership opportunities may do this, but we create affordable housing through a model where we build a community, but we cross-subsidize. So 60% of our subdivision might be market rate, and then 40% will be affordable. So we take that would-be profit off the market rate homes and put it into the affordables, and so into those 40%. So then the financing becomes really affordable for those borrowers under a certain income. So you not only have mixed income communities, but you can't tell. Like I said, affordable housing is not building cheap sticks and bricks. It's the same house as a market rate. It's just the affordable financing is the key. And we've partnered, you can partner with your municipality. For example, Santa Fe has an inclusive zoning ordinance where 20% of houses, if you're a builder, have to be affordable in certain income brackets. So I wish more high cost areas would have that, because we all need inventory. We're tens of thousands of units short of housing in New Mexico. And so those who don't develop, if you're thinking about it, it's a great space. This business model really works. And it helps a lot of people who otherwise wouldn't be able to get into home ownership. Never mind a brand new home, 2, 3, 4 bedroom home. So I think with this business model and using these types of resources and creating these partnerships, I think that's the key to combating the affordability issue. So hopefully some of these ideas will spark some curiosity and ideas in your own community. And I'm also available at any time if you want to pick my brain, or anybody at HomeWise, we would be happy to share any information that might be helpful to your organization or community. So I really appreciate it being here today and visiting with you all. And as I mentioned earlier, great partner, Self-Help Credit Union. I'm going to turn it over to Tucker Bartlett for his introduction and presentation. Thank you so much.
Thank you, Elena. And thank you to NHC and NeighborWorks for hosting this important series of conversations. There's one more shout out to Elena and HomeWise. HomeWise is truly one of the best nonprofit builders in the country, and CDFIs. The work they do is remarkable. As their partner, we do get to see their loans because we purchase a number of them, and they perform better than any. We purchase loans from banks all over the country, credit unions, and HomeWise's loans perform as well as anyone. So if not better, actually. So thank you for being our partner. Can you go ahead and share slides if they're not being shared already? Okay, great. So I'm going to talk a little bit about Self-Help's Racial Wealth Gap Initiative. So we've done this type of work since our founding in 1980, but doubled down on it in 2020 and created this internal initiative. And we'll talk about some of the goals and the products of this. Next slide. Just a quick background of Self-Help. We're a CDFI. We're headquartered in Durham, North Carolina, but we have a presence in states across the country. Our mission is to create and protect ownership and economic opportunity for all. We do that primarily through, we have credit unions spread out around the country providing retail financial services. And then we do all types of lending, real estate development like HomeWise, and have a research and policy arm called the Center for Responsible Lending. Next slide. But specifically today, we want to talk home ownership. So when we started this initiative, we sort of zoomed back and said, what are the steps to owning a home, and what could be improved in each of those steps? So, first you got to get ready for the home, get ready to buy a home, then you purchase the home, and then hopefully you sustain home ownership and develop wealth through home ownership. So upfront, conversations about credit building loan products like Elena mentioned, savings programs, et cetera, to get that down payment ready. If you need to work on your credit score, there's different financial capability conversations that you can have with our financial coaches in our branches. At the time of purchasing a home, down payment assistance, as everybody on this call knows, is extremely important. Creating new products, becoming more flexible in your credit underwriting, et cetera. And then access to liquidity, secondary markets, because as we all know, home loans can sit on your books for a long time. They're bigger and bigger loans, so they can really suck up your liquidity quickly. So having secondary markets is critical for that. And then to build wealth through sustained home ownership, continuing those conversations with your financial coaches. I saw the great question earlier about reserves, so we'll talk a little bit about reserves. And then we won't talk today about servicing, but high touch, flexible servicing is critically important. Next slide. So what I'm going to go into in depth on the rest of the conversation, I'm going to focus on that moment of purchasing the home, and then a little bit about sustaining home ownership. Next slide. Okay, the first product I'm going to talk about is what we call Self-Help 100. We're very creative in our product names. Self-Help 100 is basically 100% LTV loan. So joking about how creative we are. And so the importance of this, so this loan product, we'll go through a couple of others, is what we've seen is even if you get an FHA loan or a Home Ready Home Possible loan, 3%, 3.5% plus closing costs to low wealth borrowers can be a big barrier to home ownership. You might be able to come up with a month deposit, but then you're stuck in rental housing all the time. So how do you lower the access to home ownership? How do you provide more access to home ownership? Much like it would be to get a deposit to go into a home, to go into an apartment, instead purchase a home. So trying to make home ownership more accessible. So the Self-Help 100 does that. It is our standard product is as little as 1% down, which could go towards the closing costs to get into home ownership. We've taken that product and rolled it out in a secondary market with partners, including HomeWise. I heard the shout out to CHN. They're partners of ours, and Megan is up next. Her leadership through HPN brought a bunch of CDFIs across the country together to develop this product and to create this program so we can have more liquidity for high LTV lending without all the constraints that we find ourselves in when we're trying to underwrite to the GSE loan products. Next slide. Equity Boost is the version of our down payment assistance. So if we are able to raise funding, so we all self-help as a direct lender. So like all of you all in the lending business or in the home selling business, you all know your local down payment assistance programs, and we're pushing always for more down payment assistance. So we always want to tap that. But our experience has been that the money runs out really fast. The Federal Home Loan Bank programs, the money runs out by June. And then what do you do for the second half of the year? So we thought it was important to start creating a fund that is a revolving fund of down payment assistance. I call it like money. So what we're doing is we're taking 20,000 or 35,000 in high cost market and embedding it in the loan. So in essence, you're getting a 0% loan for 20,000, and then the rest of the loan is at that sort of reduced loan to value interest rate. So blended together, you get to buy down the interest rate, which makes the loan more affordable, and that $20,000 can help cover closing costs. So the LTV goes all the way up to 105%. We have a minimum 1% borrower contribution. So that this is our down payment assistance. Like it is down payment assistance, but it's not like the forgivable get down payment assistance programs that we all love, but are hard to find. So we still access those. You can combine it with our Equity Boost mortgage. The fact that it's in the loan basically creates a revolving loan fund. So we always have access to this money. It doesn't run out every year. As you'll see, to qualify for Equity Boost, we have your sort of standard, I'd say to the industry way, of less than or equal to 80% of area median income, or first generation. I'll talk a little bit more about first generation in a second. Next slide. Where I wanted to spend a lot of time, and this was where the question came earlier, is about reserves. So we saw the Chase Institute put out a study, I don't know how many years ago now, maybe 5 years ago now, that said it is not DTI or actually their specific point was it's not down payment that predicts default, it's reserves that predicts default. So we thought that was good news and then potentially troubling news for the industry. The good news we thought is like, let's not focus as much on down payment. It's not how much you put into the home. Nobody, there's this whole theory that people don't want to walk away from the equity in their home. If they put money into the home, then they're less likely to walk away. Nobody wants to get evicted, right? Nobody likes to get evicted from an apartment, a home, wherever. So it's not, I don't think it's that sort of tie into the equity, but it is true that if shown the ability to raise down payment, then did you also raise money for reserves? And reserves are important for when we all hit those life moments or house moments when we need to tap into some cash to get through that moment. So in reaction to that study, we said, let's, we're doing our high LTV lending. Let's not have the industry pull back and say, now we're going to ask for 3 months reserves, or we're not going to approve any loans. Let's instead see if we can pre-fund reserves. So the SAFE account, the Savings Account for Emergencies, SAFE, is a $2,000 contribution that we're making upfront into a savings account. And then we ask the borrower to put in $25 that's ACH'd along with their loan payment every month into that account. That account builds over time, becomes, after 3 years, becomes about $3,000. It's earning interest. If you have a house event, your hot water heater breaks, or if you have a life event, your car breaks down and you can't get to your job to earn income, you can call your servicer, access those funds to help with that life or house event. And then after 3 years, it's your money to do whatever you want with. Our hope is that the borrowers have seen the value of having those reserves. They might have had to tap into it at a time, and it's something that they'll continue to do. So our goals of the program are promoting savings and help build a regular savings habit. So we came up with the 3 years because we worked with behavioral economists in creating this account. And 3 years felt like a good amount of time of, if you've been putting $25 into account for 3 years, you've developed a budget to live without that $25 of income. So it's not a big tax to keep doing that. What comes along with this $2,000 up front is materials about the true cost of home ownership. I know as you know, when I bought my first home, I didn't really understand what it meant to own a home. I was used to calling the landlord when something broke. Now I had to call myself and take myself to Home Depot to get this thing fixed. So a book that gives advice on how much a roof costs, how much a hot water heater costs, how much should you save for these typical costs over time. And then the last part is to mitigate the risk of high LTV mortgages. Our theory is that if you have reserves, you're less likely to default on your loan. So are we lowering the credit risk on those loans? If we are, we can basically use those savings to pre-fund the account. Next slide, and this is my last slide. So just one thing we've pushed on qualifying for both the equity boost and the SAFE subsidy funds that we have is using first generation homeowner. As I said before, we're all used to the 80% of AMI test. What's true about the wealth gap in this country is that it exists across income groups. And you saw the statistics earlier, it's really hard to afford a home in most markets at 80% AMI. It's hard to afford a home at 100% AMI as that the earlier data showed. So if we're going to have access to home ownership, both for low wealth families and frankly for all families, we need to move above 80% AMI. So first generation homeowner is a proxy for low wealth homeowner. So we've been experimenting with this for a couple of years. We learned about this from MAHA, a great housing organization in Boston. And they taught us how to do this, and we've been promoting it. We've been evangelizing and preaching first generation as a proxy. It's starting to take on right now. And our big hope is that we get all the kinks worked out so the next time all the political stars align, we can get this in federal legislation. So I'm going to stop there. I know we'll have some Q&A later. I'll look at the chat, but let me turn this over to my great partner at HPN, Megan.
Thanks so much, Tucker. And I am Megan McCarthy, and I am the VP of Affordable Housing and Consumer Empowerment at HPN. HPN is a business collaborative of over 100 nonprofit organizations in the affordable housing space. And our members include those that do rental housing development, ownership, and operations, homeownership developers, CDFIs, housing counseling organization, and as you heard from two of our members today, HomeWise and self-help organizations that do a combination of those activities. HPN facilitates peer-to-peer learning and promotes policy and practice that's really rooted in our members' experiences. And we work in collaboration with our members and sector partners to develop and scale solutions to pressing housing challenges, homeownership being one of them. And I was invited today to really reflect on some of the national landscape and the ways that HPN is working to increase access to homeownership as part of our strategy to reduce the racial wealth gap. And we really, because of who our membership is, have the opportunity to really work across the homeownership spectrum. And by that, I mean supply, developing a pipeline of mortgage-ready borrowers, and ensuring access to mortgage products that allow families to achieve sustainable homeownership. So I'm going to touch on each of these briefly. So first, on supply, as you've heard today, and I think anybody who is engaged in the homeownership space could attest that it is incredibly difficult to find affordable housing options in almost every market. So a few of the strategies that HPN utilizes primarily through our CDFI is the New Markets Tax Credit Program. We have utilized an innovative model that gets subsidy into homeownership developing, really funding developers such as HomeWise, and they can put the subsidy to reduce the cost of the home for the ultimate homeowner. So they become affordable to families of low and moderate have low and moderate incomes. In addition, HPN has partnered with Habitat for Humanity and Hogar Espanol to create the Community Aggregators Group. And this really is nonprofits coming together to aggregate capital and utilize that to purchase notes such as the HUD HECM notes that they've put up on auction. And really the idea is to create a source of capital that allows nonprofits to compete with cash or other institutional investors to keep those homes in the affordable homeownership pipeline. And ultimately those homes, once they're kind of through the disposition process, are offered to affordable homeownership developers or directly to borrowers. Because again of where HPN sits, we think about the opportunities to create a pipeline of borrowers for that home as early as possible. And for us, that often means working with renters who are living in the properties that our members own and operate. So a couple of things that we are focusing on now are opportunities to increase asset building opportunities for renters. One of the programs that we are really promoting includes the HUD Family Self-Sufficiency Program, which allows renters that live in units supported with HUD rental assistance to save money that would otherwise go to increasing rent payments as their income increases into a savings account. Upon graduation from the program, they have access to this savings, which they can use for homeownership or whatever they choose. We're also engaged with Isusu, who's a rent reporting company, to increase reporting of on-time rent payments. And this is, we think, a really powerful way to help families who might not have any credit score or have low credit score get credit, literally, for the most important and the largest payment that they're making, which is their rent. And through the data we've seen on even just a small set of our members who are working with Isusu, we've seen thousands of families who have established credit scores. And this is opening up opportunities for them to traditional financing products. Again, mortgages, but also a car loan or other sources of financing. Like many of the presenters today, we do believe in the importance of not only opening up the opportunity and helping people understand the possibility of homeownership, but really providing them the information and one-on-one financial coaching to help them achieve sustainable homeownership. We are a HUD housing counseling intermediary, so work with our members who directly deliver. And we also participate with other partners to really better integrate housing counseling into the home buying process. And I was really struck by Mose's comment really about breaking down these silos. So we are participating in the OCC's Project Reach initiative, which is also focused on reducing the racial wealth gap. And we're working with lender partners and other HUD counseling intermediaries to develop fee-for-service models that will allow lenders to more directly connect borrowers who may not be ready for mortgage qualification to be connected directly to a housing counselor so they don't drop out of the homeownership journey, especially because many of them are actually quite close, and just working with a financial counselor for a brief period of time can get them to where they need to be to qualify. And finally, I'll just touch on what Tucker spoke to. HPN created the Equitable Homeownership Collaborative, which is comprised of HPN members who are CDFIs that do mortgage lending, which again includes HomeWise, Self-Help, and CHN, who was referenced earlier. And we really came together to identify common challenges that borrowers were facing to accessing homeownership, particularly through traditional GSE type products. And we understand the power of the CDFIs to really tailor solutions to their communities, but we also wanted to look at opportunities to scale a standardized product to be able to sell it and get the liquidity that Self-Help is able to offer. So we worked together to use the Self-Help 100 as a model and created some additional modifications, and now we have several CDFIs who are offering what we're calling the Inspire 100, which, like the other product that Self Help offers, is really focused on reaching low wealth borrowers. So we are really excited about it. We also are modeling Fahi is aggregating the mortgages and selling them to Self-Help in addition to HomeWise, who sells directly. And as part of this, we're really collecting data both to understand the impact of the product and tweak it if necessary, but also to make the case for how to bring about larger change and hopefully change some views on the risks of these types of mortgage products. And I would say as I close, I think that's an important part of kind of the work that we're doing across all of these efforts, which is not just the individual impact, which is critically important, but also how we utilize this work and our learnings to influence the field. So we are fortunate to have members who are willing to test strategies to build off the work that they're doing individually on the ground. And our role is to connect the dots, to look for opportunities to scale these effective solutions, to document and collect the data, to make the case and bring those learnings and recommendation to other partners in the field, including lenders, investors, other nonprofit partners, as well as policymakers, with the goal of bringing about larger systems change. So I really want to, again, as the others have, thank you for allowing me to participate in this panel. And I'm going to hand it over to Diletta, who I think is going to facilitate some questions.
Megan, so much. And I would like to invite our panelists back on camera for question and answer opportunity here. Great discussions, great examples of different programs, services, and initiatives that support home ownership. I have a couple of questions here. I want to lean into the partnership, Megan. You talked about partnership. So NeighborWorks America, we really lean into partnerships, and both within our sector and beyond. We know that when we talk across silos, of course, we get more done. You talked a lot about partnership, and several of you mentioned the partnership that you engage in with developers and builders. Can you talk about what is the value of those partnerships? Particularly, how are you all breaking through the idea that home ownership is only for a certain group as you partner with other organizations to break down those silos? Let's see, Mose, you went first. We haven't heard from you in a little bit. So how about that?
Okay. Man, it is so valuable because like all of us have said, without all of us kind of getting together, being able to put your thumb on a specific product, if you lack it, who can you partner with, and vice versa? Just really combining forces, I guess we can say, to really help home buyers that are out there. And when it comes to the builder, honestly, we don't know what we don't know. I feel like we're all awesome at what we do. And what I found is a lot of times they don't know. They don't know the things that we're seeing. I feel like gone are the days of just build and they will come, right? You really need to see, if you're going to build this product, what would somebody have to make? Brittany showed some great stats in the beginning of how much money it has increased to be able to buy. And if you don't have these conversations, or you're not making that part of what you do to reach out to the people in the area, the builders, voluntarily, and just kind of make them aware, not by hearsay because they'll read the news, but really from us that are true practitioners in that get to hear the stories from people and have to do the qualifying and giving them real-time stats, not they don't get decline stats and things like that. So it's been huge to be able to do that and be able to be a true help and a blessing to people because of just being involved, breaking down those walls to kind of cross over and lend some of what I know to someone else so they can do better,
Excellent. Elena, would you like to add to that?
Sure. I mentioned that HomeWise, we are a developer, but recently what has happened is as new developers are coming into Santa Fe, and maybe not even such new developers, but they're heading to the Santa Fe market. And then there's the inclusionary zoning where 20% have to be affordable. We have now created those partnerships because I think they're looking to HomeWise as the experts, not only in how do you comply with that ordinance, but also how do we get borrowers qualified for their quote unquote affordables. So now, for example, there's a larger national builder, D.R. Horton, coming into Santa Fe, and they said, hey, we love this inclusionary zoning and we're doing it, but we don't really know how. And we don't know how to sell it. And the marketing and because the city of Santa Fe, I mean, they're very prescriptive on, the tiers of affordability based on AMI. So now we've partnered. And since we have a real estate team, we'll help bring borrowers. We have a pipeline of approved borrowers waiting for an affordable, and so that's how those partnerships are shaping up in our higher cost markets, is they're looking to us. We have borrowers, we're doing the lending. We know the complexity of the city forms and how they work and how we get those city approvals per borrower. So it's very interesting how that is happening. So it avails our borrowers to more opportunities and choices.
Okay, thank you. I want to move to the chat, and we have a question here. We haven't talked about climate resiliency. So this is from Chanel Marshall. From the Black or potential buyers of color perspective, are there qualitative or anecdotal data sources on how they're viewing their home purchase, type of home, location, et cetera, in the context of climate resiliency or environmental justice concerns? And this individual goes on to say, I haven't seen much on this coming from the communities of color perspective. So there, other than just hearing national trends, so has there been any concerns in terms of climate resiliency from the home buyers?
I'll weigh in some and say amen on the need for better data. I have not seen it. So if there are others on this call that are more researcher types, that would be great to see. So unfortunately, I haven't seen it. Do we see it? Yes. I mean, we've seen this forever, right? It's where is affordable housing built? It's built in the low-lying area down where it happens to flood. And now that more flooding, so the combination of where there is affordable housing and where there's climate impact, there's obviously huge. Everybody knows that. I'm preaching to the choir. Huge overlap there, and that's the environmental justice issue. I will say that there's going to be a lot more attention to this now that with the Inflation Reduction Act and the Greenhouse Gas Reduction Fund money flowing through, where there's a lot more focus on environmental justice, resiliency, overlapped with the Justice 40 requirement that's in there to serve low-income and disadvantaged communities. So yes, we need data. If we don't have it, I think we should have it soon, as there is a lot more focus in this area. But welcome others if they know there is data. So I'd love to see
anyone else.
I don't have anything on the data, but I think this is an incredibly important issue, and I think all of us need to get better educated on how to support particularly families with low incomes on accessing the resources. As Tucker mentioned, because of the Inflation Reduction Act, there's going to be a lot of resources that are coming down, and homeownership on its own is difficult to navigate. So arming people with the information and tools to really understand the climate impacts and also the opportunities, I think is going to be incredibly important as we move forward. Otherwise, I don't think the people who probably need these resources the most will have the most success in accessing them.
Agreed. Yeah, we're having conversations here in NeighborWorks America. How can we best help our network access these resources and then make sure that that impact is being made in the communities where it's needed most? Great point. we talked about culturally competent programming and making sure that the language we use is empowering and uplifting. And there were some comments in the chat about us using the term affordability versus workforce. And then also, I think it was Mose, you also talked about, rather than using the word education, we're using empowerment. So can you speak a little bit about the choice of language and the impact that it has as we're working to create more home buyers?
Yes, I just had more success with, dare I say, maybe disarm. So someone might feel a little bit more comfortable with the situation. A lot of things, I feel that, again, it's nobody's fault. It's not even mine. I just wanted to kind of look at what am I projecting to this person? Yes, I'm a practitioner in the field, but most people don't ask their mechanic or their plumber to come educate them, right? So everybody's great at what they do, and my home buyers are great at what they do, and I lack in maybe those areas. So to really connect with them, just in a super authentic way, looking at some of the words that were generated so many years ago to describe what we do for a living. They are from 1968 when we're talking about affordability, and they're tied to such things as redlining and things that have so much negativity and trauma attached to them. So being a little bit more empowering, it doesn't have to be all fluff, but maybe if I just use a different word selection. Like I said, I challenge some of my peers to say educate without saying educate, say debt ratio without saying debt ratio. There are so many other ways to communicate just as effectively to get the point across, stay within the guidelines and requirements of what we have to do for a living, but come across a little bit more human to that person to really be that trusted advisor. So just a few tweaks in those things. So I always say, evaluate what you say. Does it project that poverty? Is it speaking redlining? Is it speaking this into this person that might have a certain feeling or trauma attached to it because it dates back so far?
Great. When you talked about trauma, we certainly have to be mindful, as we do the work in this space, of the trauma that many communities of color have faced. Fear of banking, and with NeighborWorks America, as we work in tribal communities, the approach to development and affordable housing, and also building those relationships because of the history are challenging. So we have to be mindful of that and factor in the lived experience and the trauma that many of these communities have faced. So I love that. Would anyone else like to add before we go to our next question?
I would just like to add, you said something about tribal areas. So that's a big learning experience for HomeWise is working with the Native American population in New Mexico. I mean, we have 19 pueblos and here in the state, and we've recently partnered with Fannie Mae because Fannie Mae is working with several tribes here in New Mexico to be able to offer conventional financing, and that's huge. I mean, I always bring in my own perspective, like, God forbid that Native Americans would have more of a mortgage choice than just HUD 184, which, contrary to popular belief, that's kind of hard to qualify for. And a Fannie Mae conventional loan has, it's a great option. So I think there are maybe 5 so far that have signed the MOU in New Mexico, but our big learning experience is cultural sensitivity and seeing things from the Native perspective and letting those groups lead these sessions and not outsiders coming in, pretending to bring solutions to problems that we perceive that they have. So it's very much a partnership, but that's an interesting perspective I wanted to bring up on the Native communities.
Absolutely. Thank you, Elena. We have a question here. Is anyone doing building using modular homes or manufactured homes? That sounds like a no.
we're not
All
a
right.
big home builder, but I definitely am hearing, more and more about it. So Megan, I don't know from your perspective if you see the industry broader than I see it, but I definitely, especially, as we're getting into this energy efficient home space, like the most promising solutions I've heard on energy efficient affordable housing is coming out of modular. So I hear about promising things. I've heard some, seen some projects down in Mississippi and other places that sound encouraging. But Megan, maybe you know more specifics than I do.
Yeah, I mean, I think we've definitely heard it actually both on the rental and the home ownership side. I would say kind of our biggest example would be Come Dream Come Build, who they work in Brownsville, Texas, and they're really working on developing they have a factory that allows them to create homes, and it's a really great model, and then it gives people the opportunity to also add to their home so they can kind of start with a basic model and then add as their income grows. And I know it's a model they're looking to expand.
Okay. We will, let's see, Patricia Channel. In helping first-time home buyers, are your programs also discussing home warranties during the purchase contract process? Let's see. Tucker?
Elena, do you want to go first, and I can weigh in. And I might as you're answering, say to my colleague Maria if she knows, because she's a little bit closer to it and she's on this webinar as well. I'm not that sure.
Right. Yeah, from our perspective, we do have a real estate sales group, and we deal with a lot of first-time buyers. So that information and handholding, it goes along with our realtors when they're working with the borrowers. But that's a big issue, actually. I did see a comment somewhere that in your market you weren't asking for inspections, trying to get ahead. It's still a seller's market here too, but we do have a lot of first-time buyers. It's probably 90% of them want home inspections. Not so much the warranty though. That's where we see the difference. They're not paying for the extra warranties, but the inspections. And then I think the expertise and education that our realtors do with the borrowers is really valuable. It's really calming their fears when they see the results of the inspection, and trying to look out for their best interests and protect them by giving them really good advice. But we do see that it's still very common here in New Mexico, the inspections, but again, not so much the warranties. And this is for resale, because of course, new construction comes with their own warranties. So like a 2-year or 10-year warranty. So that's kind of from my perspective, Tucker.
Yeah, I'll look and drop into the chat if I can find it. If I can find a PDF copy of our homeownership guide, and I'm not personally familiar what it says about warranties, but I'll try to find that guide.
Okay, thank you. Okay, I want to shift a little bit. Let's talk a little bit about the headwinds, because I would really curious to hear you all's answers on this. So we've all read the headlines and seen it in our work: interest rates and supply chain, right? The supply of housing. How do we handle that? How do we continue to create home buyers in this climate, in this market?
Besides pray.
Besides pray, yeah.
And hope and wish, and like the list goes on. Wow, just getting creative. I think Elena mentioned layering programs is an alternative. I think we've all been trying to dig deep, maybe. The time has really flown by from when rates started climbing, right, in 2022, considering we're almost, we're in the second quarter of 2024. I don't think we all intended to be here this long when it came to rates, to really see if rates got back to the norm. What would that look like with housing prices also being up? So I think right now, just trying to be creative with layering different programs to reduce the amount financed, finding down payment assistance programs that might have a little bit below market rate, builder specials and rate buy down, seller concession. It's like I think we're throwing everything and the kitchen sink at it right now. Prices they've been remaining fairly stable. So it's just letting this readjust when it comes to rates. And until then, really trying to push through and help as many by digging in our arsenal of all the things that we know and partnerships to try to make it happen.
I'll add on just the rates. Early last year, we became a lender, a lender partner to our state HFA, the New Mexico Mortgage Finance Authority. They typically have a little bit lower rates for first-time buyers, but we're facing the same thing. And so sometimes we will use our down payment assistance resources to help people do a permanent buy down on the rate. That's helpful, but it really is, it's challenging, of course, with the home prices and the rates, but again, layering down payment assistance, we see a little more of that than we have in the past. That's the way we're overcoming it right now for HomeWise.
Okay, thank you, Elena. Megan, go ahead.
Yeah, I was actually just going to lean into something that Tucker has said as we were working on the Inspire 100 as part of the Equitable Homeownership Collaborative, which is, designing solutions for the long term and recognizing that the rate environment we're in today might not be the rate environment we're in tomorrow. So, wanting to be as creative as possible, as Elena was talking about, we have our members who are lowering their fees and looking for other sources and partnerships, but also thinking about conditions will change and being ready with solutions. So Tucker, I really just stole your line, but.
No, thank you. I mean, I was sort of make a similar point. I think right now is actually a wonderful time to innovate because you can innovate at smaller volume, test it out. Like it's so often that we're trying, like when the market's crazy and everything's going nuts is when we try to do something new and it's impossible to do it. So I'm actually, it's not always what the funders want to hear when you show up with this is the amount, like our lending is way down. I imagine everybody's, there's fewer homes being bought. So it's natural that the loan numbers are down. But our safe loans are up, our equity boost loans are up, our self-help 100 loans are up. So all these new programs, but we're doing them at, we're probably on pace to do 100 safe loans this year. I'd much rather do 100 in a year than try to do 400 when we're really just learning how to do this. So I encourage everybody, like, this is the time to experiment. And so that when the markets are taking off, we actually have viable products. We're not trying to experiment during those markets.
Yes, typically during these difficult times, the innovation peaks, right? That's when, yeah, right. Great advice there. Great advice. Okay, looks like let's see. Someone would like us to talk about all electric housing and slab building, particularly in consistent areas where the weather changes. Are there any studies on these two actions and long-term a negative impact on buyers? Again, electric housing, slab housing, and we talked about climate resiliency a little bit earlier. So, when we build in these types of houses in the environments.
We're going to try our first one, Deletta, our first subdivision in Albuquerque, a 72 unit kind of townhome subdivision, just kind of breaking ground, working on the infrastructure, but we are paying attention to climate change and we're going to do it.
All right, Elena.
I know, including solar. And the biggest thing in New Mexico, you want to hear something funny, is the biggest pushback from buyers is they want a gas stove to heat their tortillas. That was the biggest pushback. But and I think the stove was really just the biggest thing. So we are obviously going to overcome that. There's a lot of people very in tune to climate change and the advantages of electrification, and hopefully with GGRF funding, maybe that will help us make it more affordable. And so we're going to try it. So wish us luck.
You say fingers crossed, right?
I think this is more will be known as HomeWise and others build more homes like this. But I I live in a home that was built on a slab in North Carolina where the clay expands and contracts. You know, you have hot and dry, you have hot, cold, wet, dry seasons. In all the houses that were built like mine seem to be fine. So that's a, you know, a very in-depth, peer-reviewed study for you right there. But so we'll get more data as it comes out. The interesting thing about all electric housing is heat pump technology has come a long way. So where it used to be seen that heat pumps really only worked in the southern part of the country, you know, it's being recommended and works in colder climates as well. So I think heat pumps got a bad name in some colder markets, so it's harder to convince people to go that way. And a heat pump, I've got in my house, like the original part of the house that was built has got a furnace, gas furnace, and the new part of the house has a heat pump. The air that comes out of the heat pump doesn't feel like you remember as a kid sitting on the radiator or sitting over the vent where it's blowing that warm air. It doesn't feel that way. It just heats, it's a different technology. And so you know, we've seen even where you build heat pump and it's working fine, the initial reaction from the homeowners is, this is not hot air coming out. This is broken. Come back out and see it. So there's going to be a learning process about heat pumps and how they work, much like the tortilla cooking. There's got to be, you know, we're all going to change slowly from our old habits as we decarbonize our houses. But the technology is there. It's getting better. I think we're heading in that direction where you can get all electric slab built homes that work in a lot of environments.
Sounds good. Any last remarks from our esteemed panel here? All right. Well, thank you all very much for attending with us today. Thank you for all the work that you do to create homeowners across this nation. Brittany, I will turn it back over to you.
Thank you, Deletta, and thank you to the entire panel. It was great to hear about all of those programs, hear about how everyone is working to make homeownership possible for all Americans across the nation. As just a reminder to everyone in the audience, you will get a recording of this webinar emailed to you within a couple of days. We will also be posting it on NHC's new section of our website, the Housing Resource Center. Just dropped a link into the chat for everyone. This will be open access for everyone through June 30th, and then it will go to member access only, with exception for anyone with a .gov email address, researchers, and journalists. And this is a great resource. We're very excited about it. It is a collection of all housing policy related resources that we could find within about the past 2 years. So we'll be adding this webinar to that collection as well. And we hope that anyone who's not a member will consider joining us, joining these kinds of conversations and learning more about what we all do to help make housing more affordable. So thank you all again, and thank you to our panelists.